How much longer are home prices going down? With interest rates going down since June this year, people are starting to ask if home prices have hit their lowest. In the last 3 months, the drop in the interest rates has not made a significant impact to the market. I talked about this in another video, which you can check out. A lot of people thought that home prices would start going up by now. In fact, home prices didn't change at all. So what does it mean when home prices don't change when interest rates are going back down? The first thing you need to understand is this. Falling interest rates take time to impact the real estate market. There's a delay of more than 3 months for home prices to see a significant change from the current market trend. What does that mean? This means that if home prices are down, it can take about 3 months for the market to pick up. Or if home prices are really high and the market is hot like it was in 2022, it would also take a couple of months to see home prices come down. In 2020, when the bank's key interest rate was 1.75%, the average price in Toronto was about $820,000. A series of rate drops took place in March 2020 that eventually dropped the key interest rate from 1.75% to 0.25%. By May 2020, just 2 months later, the average price had gone up to $860,000. 1 more month later in June, it went up again to $930,000. 1 year after the rate drops that took place in March 2020, the average price had gone up from $820,000 to $1.1 million. That's a 34% increase in home prices in just 1 year. But the biggest question that people have right now is, when will prices go back up? That question is asked assuming that prices are at their lowest right now. And they are. Sure, you might see some exceptions. Certain neighborhoods will see home prices going down another 1 or 2%, and maybe even more. Neighborhoods like Yonge and St. Clair, Yonge and Egg, Leaside, Riverdale, Danforth, Milliken, Agincourt, West Hill, Junction, Yorkdale, Mimico, Queensway are all trending down at a lower rate, but still seeing home prices fall compared to previous months based on the latest market updates from the Toronto Real Estate Board. But otherwise, many are seeing stability without significant price changes. Should you try to time the market to save an extra 1 or 2%? After years of increasing interest rates that led to the decline in average home prices around the GTA and seeing the market go back up and down every few years, I've realized this. It is actually impossible to time the market when rates are starting to go back down. You could be waiting for home prices to be at their lowest, but you would never know when that is until the time has already passed. From the time home prices reached all-time highs in 2022, home prices are now down by 17% from that peak. If home prices went down another 1 or 2%, that's like waiting to see if you can save an extra $15,000 on the purchase of your next home. Here's a tip. Instead of waiting to see if home prices are going down, take advantage of the market trend. Prices were going down and may still be going down. If you're in the market to buy your next home, build in that trend of falling home prices into your offer. There's a reason why home prices came down. People started offering less and less money when they were buying property. This behavior created a larger effect of declining home prices in the overall market. So keep doing the same thing. The average price in Toronto right now is $1.07 million. If you're making an offer for that price and home prices have been trending down, don't be afraid to go in with a lower price. No one should be overspending in today's market. Bidding wars and multiple offers are not a big thing right now. So what I'm saying is this. Build in the falling market into your offer price. Go in with an offer that's 1 or 2% lower. So instead of offering $1.07 million, make it $1.05 million. Try to save yourself some money. So how do we take the same information and apply it to today's market? Well, first we have to understand if we're in the same market compared to what happened between 2020 and 2022. The short answer is that we're not. You see, in 2020, the Bank of Canada made several drastic drops to the key interest rate in just 1 month during March 2020. In contrast with today's market, the Bank of Canada was slowly dropping the interest rate in June, July, and September. The rate drops were only 0.25% each. There are rumors that the key interest rate will come down by as much as 0.75% in October. Further rumors suggest that more rate cuts are coming in December. These are just rumors though, and let's just say that the rate came down again in October. That's still 1 month away. Remember what we talked about. It'll take time for that rate drop to impact the overall market and impact home prices. Another rate drop of 25 basis points will have small impact on home prices, but a rate drop of 75 basis points could really shift the market, and that's when people react. Lenders react to the change in the bank's rate, but things don't change right away. People might start getting back into the market, but they're not buying right away. It might take another 2 or 3 months or longer before they're ready. It still takes time to find the right home. This is still one of the reasons why we don't see home prices change immediately after the bank changes the key interest rate. And that's including the fact that there is a ton of supply right now compared to what we normally see in a seller's market. Right now, there are 28,000 active residential property listings for sale. In a hot market, we would see half that amount. It's typical to see only 10,000 active listings during a hot seller's market. Right now, we're nearly triple that in inventory. Here's a key difference between then and now. It's the average home price. Back in March 2020, homes were about $870,000. The bank lowered the key interest rate to 0.25%, and now here's where we are today. The average home price is at about $1.1 $1 million. That's higher than 4 years ago, but lower than 2 years ago. So what does this mean? The cost of buying is still relatively high in the present day. We're not seeing average home prices of about $820,000 anymore, but luckily, home prices today have fallen compared to March 2022 when we had all-time highs of $1.3 million. But if you can put all of this into perspective, you'll realize that we should probably forget about home prices 4 years ago. That's like comparing to 20 years ago when home prices were $300,000. Those times are gone and we aren't seeing those prices ever again. The bank decided that in an overall perspective of how the economy has been performing, with hitting the target inflation rate, it was time to start bringing down the key interest rate to avoid the risk of a recession. And that's something I'd love to hear your thoughts on. Are we already in a recession? Is that why the bank is bringing down the key interest rate? Let me know what you think in the comments. But because of this, that's why we might see larger decreases in the key interest rate in October and December when the central bank makes their remaining 2 announcements this year. But the cost of buying is still high. High interest rates prevent buyers from getting into the market. It also prevents sellers from getting the best price for their home and getting the necessary financing for the next home. But here's what's happening now. The rates are starting to trend down and will continue coming down until they reach what the Bank of Canada probably already has in mind for their target key interest rate. And once we hit that target, it won't be long before home prices have reached their lowest and then eventually start trending up. Finally, the biggest difference is that even though the rates are falling, they're not going to be as low as they once were. Mortgage rates were once upon a time under 2%. Homeowners got rates this low back in 2022 before the central bank started to increase the key interest rate. That's essentially what led to the average home price becoming $1.3 million. Even though now the rates are starting to come down, there's a very slim chance the central bank will lower it back to 0.25%, which means we won't see mortgage rates go back in the 2% range. It's likely we'll see the average mortgage rate floating around the 3 or 4% range for the average borrower. October is just around the corner. Stay updated with what's happening in the market. I'm Fred Tam and I'm putting out new content for you guys all the time on YouTube. Subscribe if you haven't already, and you can also follow me on TikTok and Instagram for these market updates and tips to help you reach your real estate goals. Thanks for watching, and I'll see you in the next one.